Update. It's December 9. It's 2024, as you know, and final month of trading. What we're going to do now is we're going to cover all the main markets. We're going to try to do that within 10 minutes. If you have questions, if you want me to take a look at any particular markets, just drop that in the chat. Or if you have any other questions related to trading, feel free to do so. My name is Alejandro Zambrano, and I am the Chief Market Strategist at Think Markets, and I've been trading since 2006. All right, before we start, I need to stress that trading financial markets, unfortunately, is high risk, and we may lose more than our invested money. As always, trade with money you can afford to lose. All right, so what happened last week then? A little summary so we can understand how we can position ourselves for this week. So, Bitcoin, for the first time ever, crossing the 100K mark. I'm sure you read about it. I saw it on LinkedIn. Like a lot of my peers were publishing about it and mentioning it. And typically when everybody celebrates a victory is when it's time to book profit. There's an old saying, and related to war, they say, well, market turmoil in general, it's like buy, at the sound of cannons. So you buy when there's like really bad, and then you book profits when on the sound of fanfares. So when they're blowing the horn, telling us that everything is fine, like who's the victory, at that point you actually book profits. It's a little bit like COVID, if you guys remember, like when COVID was at its worst, stock prices were at their worst, but that was actually the best time to buy. And then by the time they said that the panic or that the issue is gone, it was actually time to maybe book profits. So in particular in crypto markets, by the way. So that's what we witnessed last week. And also stock markets, they continue to push to the upside. The S&P 500 reached a new all-time high. Also the NASDAQ 100, which gained 3.3%. The only thing that didn't push to the upside was the Dow Jones that lost 0.3%. And the reason for the NASDAQ is pushing to the upside because it's your typical stocks that are going up. It's not all these tech stocks, AI stocks, but also travel and retail companies are telling us via earnings reports and investor updates that they're doing good. The ISM manufacturing, that came in slightly worse than expected at 48.4, which was, came in below the 50 level. So anytime it's below 50, it's actually bad, but it wasn't as bad as previously when it was at 46.5. But the focus was more on the labor market. That's where people were focusing on. So the ADP number showed us a good number of job growth. And the note from payrolls also showed us very good numbers, 227K, which is obviously much better than the 12K we saw in the prior month. That number, by the way, was revised to 3.6. The unemployment rate as well remains at low levels. It moved up from 4.1 to 4.2, and wage growth was slightly higher than expected at 4.4, higher than the 0.3 anticipated. With all this information, the head of the central bank said that the U.S. economy's strength allows the central bank to exercise some restraint when cutting interest rates. What does that mean? It means that they're probably going to cut in December by 25 basis points, but you might remember up until recently, everybody thought they were going to cut much more because the labor market was, very poor, and we had all these hurricanes and all these problems and high interest rates. But the way it looks right now, the U.S. economy is doing good, and that means maybe less interest rates. And what does that mean? Probably lower your USD, and also lower gold prices, and not today, but maybe in a couple of months, we might get weaker crypto prices and weaker stock markets. What's going to impact that primarily, I would say, would be something like tariffs, if they were implemented, and as well mass deportations in the US. So what's happening this week then? So we have the rate meeting from Bank of Australia, Central Bank of Australia. I don't think it's going to move too much because they have had the same stance for quite a while, which is that they want to keep interest rates high because inflation is at 2.8% and core inflation is at 3.5%, which is higher than their target of 2.5%. And they don't think inflation is going to reach their target until mid-2026. That's 1.5 years from now. So that's why it probably is not going to be a big market mover. But keep an eye on Australian dollar versus the USD. How about Wednesday then? On Wednesday, we have more interesting data with core inflation and US inflation. And if you look at headline inflation, it's anticipated to be at 2.7% annually. That's quite far away from their 2% target. So if inflation is stronger than expected, I would say maybe stock market's going to take a little bit of a hit, but in particular Euro USD and gold prices are probably going to move to the downside. I would also look to sell the Canadian dollar against different currency pairs, maybe against the Australian dollar because they don't want to cut. But in Canada, they are cutting quite aggressively, and they think they're going to cut again by 50 basis points from 3.75% to 3.25%. And on Thursday, we even have more central bank rate meetings. So a currency that's been quite easy to trade recently has been the Swiss franc. So here, rates are going to go probably from 1% to 0.75%. And the reason for this is that inflation is very low at 0.7%. And in the past, they even had problems with deflation. That is when prices are going down. And why is that a problem? Well, economists don't like inflation when we have deflation, because if you're going to go and buy a house today and it costs you 100 grand, and then you say, well, next year the price might be 95, so then you'll save 5k. And so when you have that, people don't feel an urge for spending. So that's why they're afraid of inflation. And that's why all central banks have an inflation target, which is usually like 2%. But that's happening. And for us, all we need to know is that we do want to be bearish the Swiss franc as well. We do want to be bearish the euro because they're probably going to cut. And the question is if they're going to cut with 50 basis points in the meeting following the one that we have on Thursday. So from a trading perspective, remember what I said. We do want to be bullish the dollar in the long run, but in the short run, we had a very steep decline. So you see a very steep decline here, and then we went up. So last week I said, let's be bearish below 106.26. The market unfortunately spiked above that level, and then it looks to create an inverse head and shoulder. So you have a head, left, and a right shoulder. I think we can go down to 105.11, and then maybe go to 106, maybe 107. But from 107, I think people are going to sell again with stops at 108. And remember, they're going to cut rates in Europe and in the US. They're starting telling us that they're not going to cut rates. So I would be surprised if we go all the way up to 170. I think we might have like a simple buy and then take profit. So maybe one swing, maybe two swings at most. But then I think people are going to sell again, and we're going to go lower. But as long as we're below 104.47, the trend is going to be bullish. Here's the S&P 500, which is also bullish. And last week we said look to buy on here from 6,000, but we didn't have the opportunity. The market just pushed above the high here and then pushed higher. So one could have bought a breakout if you wanted. And we actually reached that target of 6,062. This is the target we had 2 weeks ago. So 2 weeks ago we said look to buy here, and then for this to go up. That played out. It just took 2 weeks. Things are going quite slowly in stock markets, but they are going up. When we look at the price today, I would say be bullish between 60 and 60.23. Here, the risk to reward ratio favors the upside. And this is the gold prices. So gold prices are stuck in a big triangle. There's another one that goes here. Last week I said look to be bullish here between 2,640 and 2,613. Unfortunately, as you can see here, we actually spiked below and we would have been stopped out. There's not too much we can do about that. I think it still made sense to be bullish because overall, as you know, since March, we've been bullish. and we have had some huge success in gold prices over that period. But now we're stuck in this mega triangle, and the way this is looking, it's gonna be stuck here until January. That's the way I suspect it's gonna be. Now there's just one opportunity this week, and it could be potentially to short sell on a break to 2,604. Sell here, we can potentially go down to this level here, but it's very high risk. Instead, I will focus something on crude oil prices. So this is a nice, beautiful descending triangle pattern. It's actually my favorite pattern. I trade ascending and descending triangles, head and shoulders, inverse, and regular ones, and rectangles. So those are sort of the three patterns, bullish and bearish, that I trade. So I've primarily just focused on 6 patterns, and this is one of them. This is a good one because it's been marinating. It's been building here for quite a while. So a break to 70.52. So if you see a decisive break to this level, then the pattern suggests we can go down with about 8% to 64.66. Now this is also interesting because if you look at geopolitical tensions right now, they're coming down, and there is an idea that there might even be a truce between Russia and Ukraine before Trump takes power on the 20th of January. And just imagine what's going to happen at that point. Not in the very beginning, but at the later stage, it's probably going to be a situation where you can have gas and oil coming from Russia again to Europe, which desperately needs it. And that will overflow the market, and it's going to be high competition. So it makes a lot of sense if we will break below here, especially on a peace deal. So that's something we're watching. And then you have Bitcoin. So Bitcoin was a bit of a mess. We were stuck in this triangle pattern. I said we can buy the bullish breakout, we can buy a dip here or buy a dip here. It's always the problem here when you have everything is a bit too tight here. I actually traded the breakout and I was long, and I kept it all the way up here, as you can see, to 104. And then, we moved down a little bit, and I got a very good entry. I got it in here. And I said, okay, I'm going to keep this open. And then the whole thing went down, and I'm like, okay, this is not going to work. So I got stopped out for a small loss, and then the whole thing collapsed, and I'm like, oh, this is weird. It should not be down here. And I bought again at the dip here, and then traded it back to the middle. So I still made some money on it, but not as much money as I was making when it was up here. And if we're looking at this today, I would say we can continue to be bullish above 96,424. And right now, this morning, the market is a bit heavy. Okay, it's a bit bearish. If you look at a lot of the altcoins, which are, not necessarily even the major ones, but the smaller ones like AvaX and a few other ones like Super, they all doubled, if not more. So there's been a tremendous wealth creation for people that bought early. And I think what's happening like right now is that they're a bit keen on booking profits. And that's why it's a bit wobbly today. I'm looking at Bitcoin prices today, right now, because this chart I did on Friday. Let me just give me a second. I'm gonna load something. Okay, so if we look at this, I would say, the level I just mentioned to you is still relevant. So you have like a trend line that goes here. That's part of that triangle. So this might just do this, okay, like that. Because don't forget, we are still in an uptrend, right? But it's a bit tricky. The market hasn't really done too much since November 22nd. So if this doesn't hold, it might go down a little bit more. But I will be quite surprised. Like a 10% slide is quite big. Now, if this doesn't hold, we might go even lower. But I don't think the bull trend is over. Sorry. But I do think that maybe the market is a little bit tired. What I've noticed is that as soon as the regular markets open, there's quite a lot of selling. But on the weekends, it actually does okay. So I suspect, again, maybe a bit of sideways trading, and then we'll see what happens. But we have the Christmas period kicking in. I would say from the 23rd and the 30th, so the last 2 weeks of the year, that's when like regular traders are offline and it's just crypto traders online. And I think that might be when we have some crazy moves again. But if you look at it, like most of the stuff, again, has some amazing pushes. And I think we're now getting a bit of profit taking, and that's why the market is the way it is. Okay, let me see. Do you have any questions? If you do, then it's time to ask them. I know quite a few guys watch the recording. I'm really grateful for that. If you have any questions during the week, you're most welcome to leave them in the chat, and then I will check them out. I'm going right now on Think Marcus Facebook to see if there's any questions. Usually there's not. Let's go to YouTube.
Intenso y cremoso como un doble espresso.
Yes, you know what happens, right? You go on YouTube and you get the ads. Yeah. Here we go. Okay, so no questions here either. All right, thank you so much for joining me, and I hope you have a successful trading week, and I'll see you Monday next week. Goodbye.